Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are holding on to gains on a range-bound day of trade. Benchmark indices gain for the third day in a row. The Realty Index is the top sectoral gainer, while the Volatility Index is flat. Exchanges see clarification from Zee Entertainment over news reports of the Corporate Affairs Ministry ordering an inspection of the company's books. The stock is the top loser on Nifty today. BPCL is among the top gainers on Nifty after Bloomberg reports citing officials that Rosneft is keen to bid for a stake in the refining major. Cipla is set to report its third quarter numbers anytime now. The stock's trading with losses of close to 1%. And the Cabinet approves amendments to the Banking Regulation Act. Cooperative banks will now be under the regulation of the Reserve Bank of India. Good afternoon, Agam. Well, third straight day of gains coming by, and it's been a good rebound post the carnage that we witnessed on the budget day.
Oh, yes, absolutely, Navneet. What we are looking at right now is the gains of around 0.5%. As far as the Nifty is concerned, the Nifty Banking Index also higher by around 0.6%. So that's also doing well. In terms of the key gainers, there are some key movers in today's day of trade that should come up for you on your screen right now in just a bit. So we do have Reliance Industries, HDFC Twins, along with ICICI Bank, leading and the indices for now. And on the other hand, some weakness in Infosys, Kotak, Mahindra Bank, and Maruti Suzuki, but not too much to speak for otherwise. Gains seen all across. This is as far as your the heat map's concerned. And Yes Bank is up along with Tata Motors, BPCL, UPL, Bharti Infratel, all of them looking at good gains. And on the losing end, you have Zee Entertainment, Hero MotoCorp and Dr. Reddy's also losing out to a certain extent. Let's also take a look at the other factors which are moving in trade in today's day of trade. And we should be taking a look at a whole host of other more stocks. So we do have REC, Mahindra and Mahindra Financial Securities, SRF, Torrent Power, all advancing in trade. SRF is moving up around 5.5%, despite the fact that we've seen some of the segments not coming up to the mark as far as the guidance is concerned. That said, weakness in Castrol India, XR Industries average, as well as Varun Beverages looking at a decline as far as your intraday trade goes. So on the whole, that's how the mid caps are panning out. Well, moving in tandem with the benchmarks advancing. But let's also take a look at the futures or options space. Navneet, what do you have for us?
Well, look, it's been a strong rebound, and as we speak, I guess Nifty is back to being around the highest level of the day. That's around 12,050 thereabouts. Futures are still trading at a discount of about 5 points, but I want to highlight intraday the discount has narrowed. At one point of time it was about 20-25 points, and now it's just about 4 points. Let's see by the end of the session the futures can trade into the premium or not. But having said that, even the Nifty Bank futures are now just fluctuating between premium and discount, so absolutely flat. And of course there are signs of some positions being taken there as the open interest is up about 13%. What levels to watch then after the rebound that we've seen in the past three sessions? 12,050 call, by the way, seems to be quite active, and now it's at the money considering we are trading around that mark. 9.5 lakh shares have been traded there. While on the put side, you are seeing aggressive writing coming in around the 12,000 put, which has added about 25 lakh shares, giving you an indication maybe this could be the support for the markets moving ahead. But of course, if the markets were to move higher, the next resistance is around the 50 DMA at about 12,130. Individual stocks, while there are a lot of stocks which are moving around, but the power financing companies are quite active today, and one of them being REC. Significant open interest addition seen in today's trade, and with the move that we've seen today, the stock has also crossed its 200-day moving average, and 33% of the quantity traded for the day has been marked for delivery, giving an indication maybe it is some cash-based buying. The stock's up 6.5%, and the futures open interest is up 24%. We mentioned Zee in our headlines. The stock's down for the second straight day, of course, on back of some media reports. Let's see if there is any sort of clarification which comes from the company or not. But in terms of trading activity, fresh positions continue, and the stock's been down almost 24% so far in 2020. Could be days low, down about 9%. And finally, Ujjivan Financial, which has touched 52-week high. The stock has been exhibiting strength. On the future side, there are long positions which have come in today's session. Also, the stocks gained on very high volumes on the cash side. In fact, the AV80 function of Bloomberg there on your screen, white line projecting today's volume vis-a-vis the average volume of last 20 sessions, giving you an indication the move of 5 to 6% which has come in today is on back of good volumes as well as trading activity also on the futures side, Agam.
Okay, well, let's begin with earnings. And we have Praj Industries, which saw its top line and this profit fall by as much as 9 and 7% respectively in the third quarter. However, it's expanded due to lower raw materials costs. Let's discuss this quarter gone by and the road ahead with Shishir Joshipura, the MD and CEO of Praj Industries. Shishir, good afternoon. Thanks for taking the time out. Can you tell us about the assessment that you have had for this particular quarter and all the ins and outs?
Yes, good afternoon. So this has been a quarter which has been on an external environment front. Of course, we've seen very challenging dimensions on the economic side. Having said that, what was important is also, we saw that the speed of the finalizations and decision making in the market had undergone a change. And only towards the end of the quarter, it started to come back to normal. It was slowed down, but it started to come back to normal. And we are, as we see things, we think that going forward in the current quarter, that is the quarter 4 of the financial year and the future quarters, we remain confident, reasonably confident that the execution speed will pick up as well as the decision-making speed will also return to normalcy.
Sir, could you give us a sense with regard to order inflow now for the first 9 months, how that's been vis-a-vis last year? And are you seeing any sort of pickup there as well when it comes to order inflow?
So we have an order book now which is at about 1,100 crores for as we move into the quarter 4. And we are seeing a traction building on the inquiries. And as I was mentioning earlier, that there was some kind of a slowness that is crept in terms of extended cycles for decision making on account of different factors, economic slowing down, some decisions getting delayed on credit disbursal, etc. But we see that trend now coming back to normal, and we expect that things will change for good as we move forward.
Okay, Shishir, can you also give us an idea about how you expect to see operating margins going forward? A little bit of an outlook based on the kind of traction that you've seen right now?
I'm sorry, we're not able to give any guidance on the forward margins. As I was mentioning to you, our order book is healthy, and we expect continued positive development in the business.
What do you make of the recent announcement that have come by? For example, Cabinet has declared that there will be no separate environmental clearance which is required for sugar mills in order to produce additional ethanol from B-heavy molasses. What sort of an impact does it have on a company like yours? And if you could tell us, within this ethanol space, what sort of an opportunity do you guys see?
Yes. So, this decision around the fact that if you switch your feedstock from molasses C to molasses B, and therefore you have increased production for ethanol, since it does not leave an environmental footprint, the clearance is automatic, which earlier was not the case. So if you want to switch feedstock, which means if you want to even go for a brownfield kind of an expansion, you have to go through a whole process of environmental clearance, which was delaying the whole process. That's no longer the case. With these clearances, even the CPG projects going to white zone category, which means no environmental clearance required. That would mean that the decision cycles will shorten. That is what I was mentioning earlier, that we expect them to come back to normal very soon.
I'm just going by the press release of the company. The last time the OMCs had floated an order for ethanol, there was a supply gap. For example, they floated an order for 511 and they received supply of only 156. Recently, once again, now they floated a second tender of 253 crore. The time period for that is between 1st February to 30th November. Tell us what sort of participation or what sort of supply can Praj Industries provide in this sort of tender?
So let me clarify. So we don't make ethanol. We have technology and engineering capabilities and manufacturing capabilities that allow us to put up plants that make ethanol. So if there's a continuous gap between demand, which is, as you have rightly surmised, on the higher side at 5 million crore liters, and the supply being at the lower side on 167, and then now the next tender 253, I think the supply and demand gap actually means that there is a lot more demand for the end product compared to the supply today, and that means that a lot more new capacity needs to get created, and that is where Praj will have a place.
Okay.
Okay, Shishir, can you tell us a little more about in your press release, again, you do mention that there has been some pressure with respect to the economy, the macros as a whole. What is your anticipation with respect to the upcoming few quarters and whether or not you do expect at some sort of improvement with respect to business, especially when you cling on to the macros?
So, as I was mentioning, that we are living in a challenging economic environment where obviously the demand on risk mitigation, which are arising out of factors beyond most normal business areas, the whole policy dimensions that intervene, the globalization impact, coronavirus, for example, just now, what is the impact of it? So there are factors which are beyond one's normal business areas, and as I mentioned, that it is now likely to, it is making a more robust project appraisal, relatively speaking, and that is the phenomenon that we observe in the marketplace. Having said that, I think what's more important is also a huge gap between the demand and supply, especially in India, between the demand for ethanol and the supply. That creates a big opportunity for us. So we believe that the tailwinds will definitely outweigh the headwinds, and so it will be a net tailwind for our business, and as we go forward, it will only develop positively.
Right. Just to get a sense, since you mentioned about coronavirus, and of course you guys do export as well, by any chance, will these factors have an impact on your export business in the current quarter?
No, for us, China is not a market, nor Hong Kong, which are the two most affected places. For us, majority of our markets are, of course, Southeast Asia in terms of Thailand and Philippines, but on the other hand, Africa, South America, so not much connection to our business or export markets. Okay. What I meant was that if this continues for a period of time, then I have to see the changes that would incur on the globalization side in terms of the steel. China is a major steel producer. There are supply chains that are dependent on Chinese supply. So we'll have to see how the impact actually goes out.
And the current revenue split of about 30 to 70% between export and domestic revenues, do you see this ratio remaining same, or do you expect the share of export revenue to go higher in FY21?
No, so it's range bound, so it will be very similar to what it is right now. What I want to make a point here is that India has had a very, very favorable policy environment, so that's really pushing the capacity creation in the country. So to keep the same ratio, obviously you run even faster in the international market, and that is what we are doing.
Shishir, I know that at this point in time, the purifying segment does not contribute to as much in terms of revenues, but we did want to understand the scope of this particular business and that whether it could actually involve a lot more eventually over the next, couple of years.
Did you mean high purity business?
Correct.
Sorry, am I correct in understanding asking you our high purity business?
That's correct. Yes, I want to get an idea and the outlook of whether or not we can eventually see much more business coming in over the next couple of years, and whether it could actually contribute to a lot more than just 7% from what I understand in terms of total revenues.
So high purity business is very focused business on the pharmaceutical vertical, because all their products and services are meant to serve pharma industries, both biopharma and conventional pharma. And I think so in many ways, what happens to them is also tied up to the fact on two dimensions. One, how much of manufacturing capacity gets built in the country and or in their chosen markets around biopharma and pharma spaces. But also that's one dimension, which is the market dimension. The second is our own, in terms of how we can develop products and services that can go deeper and to a higher share of wallet from the same customer. So both of these will have to have an interplay, and we expect that both of them will move positively.
Okay, Shishir, we leave it on that note. Appreciate you joining us today and taking us through the quarter gone by. That's the management of Praj Industries. Of course, there was some bit of margin expansion seen during the quarter owing to raw material cost as a percentage of sales falling. But net, I guess the numbers were largely weak, and hence that reaction on the screen. The stock's down about nearly 3 to 3.5%. And just want to focus back to markets. We're at the highest point of the day. So definitely there is some buying interest which has come in the last 15-20 minutes of trade. trade. Nifty is now up about 91 points. It's inching very, very closer to the mark of 12,100. Let's see if that mark can also be conquered in today's session or not. On that note, let's bring in our next market voice then. Harish Krishnan of Kotak Mahindra AMC joins us on the show now. Mr. Krishnan, good afternoon and thanks a lot for joining us today on BloombergQuint. The market mood seems to have changed, I guess, post the budget day, where we did see carnage in the stock market at least, and we're back to those pre-budget levels. There's a strong rebound across the board. What is your assessment been of budget 2020? What were the hits and misses according to you?
So I think given the very sharp reaction we saw on Saturday and the subsequent pullback that we've seen in the last 2 days, I guess the verdict is out clear that the budget was pretty much a non-event. While there clearly were expectations from the investor community with regard to, for example, LTCG, etc., and also possibly a potential pump priming of the economy by way of a stimulus, which is good for the equity markets but not necessarily for the bond markets. And the fact that the government has chosen not to do any of these has meant that broadly this has been a budget which is more focused from a continuing stance point of view rather than any disruptive form or change that has come through. So I guess that is what the market by and large now thinks of the budget.
Harish, good afternoon. This is Agam here. I just wanted to better understand, so in the broader markets, a lot of these names, they didn't correct before the budget, and after the budget, they have moved even higher. Of course, these are some very quality names that I'm talking about, and names which are possibly from the consumption space, which have always traded at extremely high valuations. In a time when markets are already so polarized, would you allocate even more money towards these expensive names which are already trading at heady valuations? How are you going about some of these names?
Yeah, you're right that it has been a polarized market for the last 2 years or so. Having said that, I think over the course of the last 3 months and more specifically this year, calendar year, we've seen some amount of broadening of the markets with participation both from the mid cap and small caps as well, compared to those chosen 15-20 names which have been doing all the heavy lifting over the last 2 years or so. Our view on this is that there are two broad mega themes that we see panning out in India at this point of time. First is a massive amount of deleveraging and consolidation in India Inc. Sector after sector, we are seeing consolidation. We are seeing the larger names or the more stronger names getting more and more powerful from a competition point of view. So while the current economic environment might not be very encouraging from a demand side, in the sense that it's not that the demand is going gangbusters, but from a supply side, clearly the stronger hands by access of both technology and capital are trying to get more and more share of the market. So that is one theme that we see happening. And the second theme that we are starting to start seeing trickle by is that actually cost of capital is starting to come down. Now there are enough reports which seem to suggest that the weighted average lending rate for India Inc. Is at an extreme high from a differential perspective compared to the repo rate of the RBI. And over the course of the last, say, 30-45 days, we've seen the ECB market open quite significantly, and a lot of companies have actually been able to tap the overseas market. Even the Indian market is starting to loosen up. These are very early signs which we think, if there aren't too much of accidents going forward, would mean that the cost of capital actually comes down. Add to that the cost of taxes which have come down thanks to the corporate tax cut. We think that for the overall segment of markets, it's actually pointing to a very encouraging set of data points to view from a slightly medium-term perspective. So we think that while currently market is fixated on the consumption side, because that is where there is safety, quality, all these perceptions, we think that it will get more broad-based. We think investment will start picking up, and therefore across our portfolios we have actually moved to the investment side from the consumption side that we've been there for almost 3-4 years subsequently.
Okay, I just want to mark few stocks. Pull up Westlife Development, though it's recovered from the lower level. I think the stock had fallen quite sharply in trade just a while back. Yeah, and it's recovered. I don't know if there was any block deal or so. We'll check that. Also want to mark some other stocks which are moving. Of course, Tata Motors being one of them. They've launched a new car in the Auto Expo, and I don't know if it's as a result of that, but clearly some commentary coming by from the management where they're looking for more launches into the next 18 to 24 months, nearly 3 or 4, which will be focused on the electric vehicle space. Having said that, just pull up the Nifty Auto Index as well and check what the other stocks have been doing. Auto index is okay. I think it's given up gains when we opened today. Auto index was up nearly 1%. TVS Motors was reacting to its numbers, and that one saw a positive. That's also given up almost all the gains. So the numbers were in line, but we did see some margin expansion coming by from TVS Motors. Harish, from the auto pack, what's your assessment been so far in terms of monthly sales numbers, or for that matter, even the earnings so far which have come out? Are you looking at this space closely? Do you think the revival could be underway anytime in future, maybe post the BS6 implementation?
Yeah, so clearly BS6 is going to be the overarching theme for autos, given the fact that it is under 3 months away. Therefore, data points, be it the monthly sales or the quarterly earning print, will be masked by how OEs decide to clear off inventory, provide discounts, etc. So from a slightly medium-term construct, I guess the dust will settle down post that in June, July, where going into the festive season and hopefully newer products and launches, we are going to see a greater sense as to which are the companies that have got a slightly more interesting medium-term prospect. Having said that, the way we are looking at autos, I think we are far more encouraged by the auto ancillaries rather than the auto pack at this point of time. Clearly, regardless of how BS6 impacts various auto companies, I think there will be a greater volume focus coming through for the auto ancillaries. Also, a lot of auto ancillaries are global suppliers. Clearly, global auto cycle has been in a funk far longer than the Indian auto cycle. It's been almost 2.5 years since we've seen the global auto cycle actually doing quite badly. And of course, there is this incremental development of the coronavirus that needs to be seen as to the persistence of it. But by and large, we think that the auto ancillaries catering to the global auto cycle are likely to do well as the wholesales start picking up globally.
Okay. All right, should we leave it at that? Thank you so much for joining us and taking us through your views on the markets. Of course, some pertinent points being made out there, but we'll move on to a management for the earnings for NIT Limited. We have Sapnesh Allah, CEO NIT Limited, who's joining us on the show. Sapnesh, good afternoon. Thanks for taking the time out. We're looking at some very steady earnings coming on for NIT NIT Limited, and these are largely in line with what we were working with in terms of expectations too. Let me start off with your performance in terms of the corporate learning group. How are you seeing things pan out here? Because we're looking at 17% growth on a year-on-year basis, and that's quite healthy. Are we expecting further strength in this particular segment going forward as well?
Absolutely. So from an overall perspective, like you pointed out, we've seen 10% growth at the NIT level. The corporate business has done really well. The growth is 17%. In volume terms, on constant currency basis, the growth was 18%. So the corporate business has done really well, and we expect that it will continue to perform at an accelerated clip on a go-forward basis.
So Sapnesh,
it added 2 new managed training services customers, in the last quarter and also expanded its contract with a couple of existing customers.
Right, so Dinesh, my question then is that, considering you guys are expanding and the way NIT Limited is moving on, are there further investments which are in place right now? And in that case, do you think that these further investments may have some sort of a near-term impact on operational profits?
I think we are considering a number of investments. We are considering both organic as well as inorganic investments, specifically in the areas that are key pillars of growth, namely our corporate business, as well as in India, our stack route and our talent pipeline as a service business. So we are considering investments in these areas, both organic as well as inorganic. In terms of how it might affect our operational performance on a go-forward basis, I think the quantum of investment and the timing of investment will tell. Suffice it to say so far, I think we are making strategic choices in terms of making investments, and each of these investments are aimed at accelerating growth for the company.
Okay, so Dinesh, I suppose that when it comes to your acquisitions, you can't really tell us any more about what you're looking at, but can you at least give us an idea about the kind of ticket size this acquisition may be? And it could even be a very large range if it's possible for you to do so.
We typically look at organizations in the $20 to $40 million range, global organizations. Our goal in terms of acquisitions is and has always been to improve capability as well as geographic or market reach. So that's sort of the range that we play in.
All right, Subnesh, from a very macro-oriented perspective, we are not exactly seeing the best of scenarios when it comes to jobs in the country. My question then is, when it comes to training services, what is your current outlook? And I know that you guys operate in some very niche segments. That said, if you could still give us an idea about the kind of traction that you are witnessing, the kind of conversations that you are having with your clients.
Sure, happy to. I think we have 2 points of view on it. The first one is that given the amount of turbulence and the number of disruptions that you're seeing, technology oriented as well as to some extent environmental, more and more corporations are looking at focusing on what they do best, focusing on their core competences, and they're looking for organizations who can do training for them. In fact, who can do training for them much better than they can do themselves, because all of them are looking at the future of work being very different from what it is today. So they are looking at specialist organizations who can help them mold their workforce to be ready for the future while they are able to focus on their core operations. So I think that's one key point of view. I think the second key point of view is to take advantage of the technological disruptions that are taking place. Organizations like technology companies, organizations who are building technology-oriented products, organizations who are key users of technology, for example, banks, insurance companies, life sciences organizations, they're trying to figure out how to transform the talent that they have, especially the technology talent that they have, so that those folks can drive change, drive transformation, build new products that could enable them to address the future a lot better. So from both of these points of view, I think we are seeing significant demand for our services, and I think we are well positioned both in India as well as globally to take advantage of these trends.
Okay, fair enough, Sapnesh. We leave it at that. Thank you so much for joining us and talking to us here on BloombergQuint. And of course, the stock has been doing reasonably well today. At least since the earnings have come in, we've actually seen a spike in the stock price. It's trending above the mark of 100 rupees per share. 101.9 to be precise is up as much as 2.3%. So clearly, investors are buying into these earnings. But it's time to switch back focus to the markets, and which are currently trending at days highs too. In fact, the Nifty is at around 12,085, inching towards that mark of 12,100. Of course, the 12,000 mark, not only on a psychological level, but even on a technical basis, a lot of analysts were looking at the 12,000 mark as an important one, and the Nifty being able to sustain there and above that mark. Do remember that your maximum put concentration is also around the 12,000 level. That is a 12,000 strike price put for this particular month, and that's exactly where we're going to watch out for, because again, a crucial one, and again, not necessarily only on a psychological level. On that note, let's get in our technical experts. We have Manav Chopra of Indiabulls Ventures, who's joining us right now. Manav, good afternoon. Thanks for joining in. What's the view here on? Should we see the Nifty sustain at these levels? How would you address the benchmarks from here on?
See, we have already seen a very good amount of a rally from its important support, at least on the Nifty and the Bank Nifty, and particularly the move that we witnessed yesterday was mainly led by a good amount of short covering. There was aggressive we had witnessed aggressive call writing on the day of the budget, and there was strong unwinding that was witnessed yesterday. Though the markets have yesterday managed to close at the high points, and today we have seen that follow-on move. I sense the bears are arrested, and going forward, the Nifty would form a very strong base at 11,800 for a medium-term to short-term basis. For the near term, we are expecting the targets of 12,150, which is likely to be achieved. So I sense any rally towards 12,100 to 12,200 should be a good level to book short-term profits. On the lower side, we do maintain a buy and dips approach. Specifically, we have also seen a good amount of rally coming from the broader markets, the mid caps and the small caps. So I think it's for a short-term gains, it's also a good strategy to maintain your picks, at least from the mid cap space.
Okay, so stay put with your position in the mid-cap space is something which Manav is advising. Can we just pull up the Nifty Futures before we get to individual stock ideas from Manav's side? There you go. We were highlighting this when we started the show and we did our F&O check. The futures were trading at a discount for the fourth day, I believe, and the discount intraday had gone to as much as 25 points, and then it had narrowed to 5 or 6 points just, I guess, 20 minutes back, and now Nifty Futures have turned into a premium. Actually, this is a positive sign considering the rebound was so sharp today as well as yesterday, but the futures continue to trade at a discount, which was telling you that there was no unwinding of short positions which was taking a place, which could have led to a short squeeze, and that's exactly how it's playing out, as the Nifty Futures now have moved into a premium of about 2 points. Having said that, Manav, in terms of individual stocks then, what are you betting on?
Yes, so I have two buy calls. My first call is buy on Chola Finance. In fact, this stock has seen a good amount of a breakout today, at least on the daily charts, and since quite some time, the stocks was in a strong uptrend, and since there is a breakout today with volumes, I sense this momentum rally is likely to see a strong legs on the upside. In fact, the volumes also are confirming a very sharp breakout as it's trading about its 50-day average volumes. On the lower side, it's a buy with a stop loss of 335, maintain a buy on its approach for an upside target of 365. My second buy call will be on Aegis Logistics. In fact, this segment too has seen a good amount of a momentum rally, and today, since the prices are trading near its important all-time highs, and the prices too have seen a good breakout, at least on the weekly charts. I sense on the lower side one can maintain a buy on this approach. From the medium term perspective, we could expect a good momentum rally to be seen into the stock. A stop loss of 225 for an upside target of 275.
Okay, let's get in Ruchit Jain of Angel Broking as well, who's joining us on the show right now. Ruchit, good afternoon. What's your view on the benchmarks now? Are you also looking at things constructively as far as Indian equities go?
Yes, hi, very good afternoon to everyone. Well, yes, certainly, we have seen a V-shaped recovery after testing the 200-day moving average. And if you look at the broader trend, the weekly or the monthly charts, then the broader trend was still, for the markets, is still positive. Now, one good thing is that this up move in last couple of days has again been supported by broad market participation. It's not that only few of the index heavyweights are pulling the index higher. So I think we have certainly resumed the higher degree uptrend, and we would see further high levels, maybe around 12,300, 12,400 again in next few weeks. So as of now, the biasness continues to remain positive. Yes, we have rallied very sharply in last 3 days, so the risk reward ratio for fresh longs and the index is not favorable over here. But in case if we get any dip towards 12,000, 11,950 range, that should be used as a good opportunity to create fresh longs. But on stock specific ideas, I think we have from the broader markets or from the mid cap space, very good outperformance has been seen, and one can see that the volumes along with the price up move is also good. So I think stock specific opportunities would continue to provide better returns.
Okay, and in terms of individual stock bets for this afternoon, Ruchit?
So I have a couple of buy recommendations. The first would be a buy call in Maruti. In last 2 days, we have seen a pullback move from its 200-day moving average support, and today I think the stock has corrected by 2%. So this again gives a good opportunity to buy this stock in today's dip. So currently 7,000 to 7,050. This is a good support range as per the retracements on the lower time frame chart. We are advising to trade through options in this 7200 call option, which is right now trading around 120, 125 range. Can be bought with stock below 45, expecting targets around 265 before expiry. And one of the mid-cap names that we are positive on is Sequent Scientific. On the weekly and the monthly chart, the stock is on the verge of a breakout from a cup and handle pattern, and the kind of volumes have panned out in the recent past. Now we believe that the stock should provide decent returns in short to medium term. One can go long at current levels for short term with stock below 85, expecting targets of 102.
Okay, so those are some individual stock bets coming for you. Just want to highlight some development which is there on social media. And in fact, I'm reading this from IndiaTVNews.com. They've said Imperial College London scientists have said that there is significant breakthrough with regard to coronavirus vaccine. In fact, he's been leading this. He said he and his team, they've made significant breakthrough when it comes to coronavirus vaccine. And this could be a very, very positive news for global markets as well. Of course, global markets last 2 days could have shrugged off this particular issue, since we have bounced back from the losses that global equities were seen. But remember, the way the magnitude with which this virus was spreading was quite intense. On January 20th, only 2 deaths were reported, and now the number has reached close to about 500. So that's just update coming in with regard to coronavirus. But moving on with markets, Neeraj Dewan, director at Quantum Securities, joins us on the show now. Hi, Neeraj. Good afternoon. Some positive news coming by. Hope that it is true with regard to treatment of coronavirus, and global equities also seems to have shrugged off those concerns, the losses that were coming through. We've also bounced back. The budget seems to have been, digested properly now. Let's see if we can once again touch those fresh all-time high levels that were seen just about 15 days ago. What's your approach been to markets? We've got some good earnings also coming by, especially in the way Titan reported its numbers. Good bounce back, at least seen from the September quarter numbers. Your approach to the Indian equities, earnings, and any individual stock which has stood out for you in terms of December quarter earnings?
Yeah, good afternoon. We've seen the earnings has been mixed bag, and there were expectations that the earnings will not be that great. But there, like you said rightly about the consumption stocks. So the consumption stock, the kind of hit we thought they will take, they didn't take. So even, if you see companies like Dabur or Godrej Consumer, they in fact showed some improvement in the volume growth also. And the results were not that bad as people were expecting them to be. That's why we saw this bounce back happening in the consumption stock. You saw Hindustan Lever, you saw Titan, you saw Dabur. So after results, they actually did quite well. So I feel that the approach now, because result seasons, majority of the companies have already come out with results. So the major part of the result season is almost going to be over. So and the budget is behind us now. Okay? Budget impact, which was there for a couple of days, would have already gone over. though definitely there are going to be some irritants in the budget will be there in people's mind, which have happened. But then you'll move ahead from these levels. And I feel now, after you've seen the results, you've seen the budget, now is a good time to take a stock-specific view, because the view which we had from December onwards was that growth would have bottomed, and now going ahead, you should see pickup in the growth. So if that is the case, then mid-cap stocks and selective bets can do very well. So now is a good time to be stock-specific and stay invested in the market for the rest of the year to see what return you get if recovery is actually to come by September, October, or in the next 5 to 6 months.
Okay, Neeraj, there are two stocks from the consumption space which are not doing that well. That's Marico and ITC. How would you advise someone who's interested in these stocks to go about them, or would you ask them to avoid ITC and Marico right now?
As ITC is concerned, there are a lot of headwinds for them as far as the main profit-making cigarette business is concerned. And we've seen that this stock has not given return for the last couple of years now. We've always been feeling it's a value buy at 270, 250, but it's been a stock which has not given return and in fact been a value trap. So I would rather see what kind of price hikes they take and how they absorb into the market, and if they're able to retain the market share. Because we saw them even using some market share to places like to places like Godfrey Phillips. So I'd rather see how that pans out before taking a bet on ITC. And as far as Marico is concerned, I think the kind of business Marico is into, they gave us advance warning about this quarter and it played out in the result. But I think that can pick up, and on valuation parameters, on return ratios, that company is doing very well. So if for a medium to long-term investor, I think this is an opportunity to get into a stock like Marico.
Okay, Marico has also touched its 52-week low. I believe it's rebounded from those lower levels. It's up now 1.5%. But of course, as Agam highlighted, it's been an underperformer. As you can see even on your screen, last 1 year, the stock's down about nearly 14%, while you've got a whole host of other FMCG companies giving you good returns. Pull up Tata Motors. I think that's going from strength to strength. The counter is now up by about 9 to 10%, almost, 9.2%, 181 here. Ruchit, on the charts, from these current levels, of course, it did touch the mark of 200 few days back. Then it went lower. Now it's recovering in today's session. Do you see any trade here?
So last couple of days, the stock had formed a back-to-back doji pattern around its 200-day moving average, and from there on, the stock has resumed its positive momentum today. I think this is a quite positive sign, and I think the stock should again approach the levels of 195, 200 quite soon. It's already up by 9%, and the 200 DMA support is around 160. So the risk reward is around 1.1:1 if you buy at current levels. But in case if we get any kind of dip again towards 175, 172 range, I think one can initiate fresh longs over there.
Okay, I also want to address Avanti Feeds, because that's the top NSE 500 loser, and it has lost out not necessarily because of weak revenues, but certainly because of weak operating margins, and that's the reason why that weakness is coming in. From 700 rupees per share trend above that, it's currently trading below 600, 588 to be precise. Manav, do you have a technical view here on Avanti Feeds? What would you like to see before you would want to buy into this stock again?
See, overall the stock has already seen a very good rally from its lows of 280 levels, and since then a very good bullish momentum towards the levels of 750. I sense we have to evaluate the structure post the gap down today, and going forward, in case the stock still manages to hold on and hold on to its important long-term support of 220 to 240, I still feel that the overall structure is still intact. So given a choice, if somebody who wants to buy this stock for a long-term basis, I think 540, 550 would be the important levels. And in case if the stock manages to hold on to that support level, it would provide a good risk-reward entry for long-term basis. For the short term, since the prices have breached the support, we could see a near-term weakness where 595 to 600 would act as a resistance. But I think looking for the overall structure basis, one should look only on the dips to initiate long-term positions at the lower levels.
Okay, that's Avanti Feeds. I guess the rub-off impact, at least in the morning session, was seen for other shrimp players as well, be it Apex Frozen Food or, for that matter, Waterbase. They too had corrected in trade. Yes, Apex is down about 5%. Waterbase should also come up on your screen. That's also seen a sharp correction of over 5%. Keep an eye on those flashes there on the screen. That's coming from the conference call of Bharti Airtel. Remember, the numbers had come in post-market hours yesterday, which were largely in line. In fact, the India business growth was flat, while the Airtel Africa reported a strong performance. From the conference call, some commentary coming by with regard to ARPUs, and it's looking quite aspirational, I would call it. They've stated industry ARPU needs to move to levels of about 300 for long-term sustainability. And remember, the current ARPUs are just in that range of about 130 to 135 rupees. They've also said they've completed 3G service shutdown in almost 11 circles, and they witnessed highest ever 4G customer addition in the quarter gone by. Neeraj, in terms of the telecom space, of course, and specifically talking about Bharti Airtel, the numbers were pretty decent, almost in line. Africa business was good. The commentary has been, I'll say, encouraging. They are targeting ARPUs, or they're saying industry ARPU should reach that level of about 300, which is way above or beyond the current levels of ARPUs that we are seeing. Would you agree? All the negatives, at least so to say, for a company like Bharti Airtel are now factored in, since they've been making provision, they've raised money to pay the AGR dues, and we've seen in the last 3 or 4 months the stock also performing really well.
Yeah, absolutely. The negatives got priced in, and the kind of addition that they're seeing to the subscriber base and the improvement in ARPU is reflecting in the prices of the stocks also. And the stock, like you rightly said, has also moved a lot since it bottomed a couple of months back. But going ahead, this business is challenging because now we talk about investment going ahead. There are going to be investment required for 5G also. So they've been raising money, but then even the dues have to be paid. So after seeing this kind of a run-up, I don't see a very significant run-up from these levels. Though this can be a market performer and this can perform with the market, I don't see any negatives playing asset for the stock. So if one is invested, can stay invested for stock to give a market performer return. But I would not advise anyone to invest fresh into the company after we've already seen this kind of a run-up in the stock.
Okay, let's also talk about Bajaj Finance, which is now almost at around the market capitalization of India's largest public sector company, public sector bank, the State Bank of India, both with a market capitalization of approximately 2.7 lakh crores. And of course, Bajaj Finance, we all know of the kind of growth, up move it's seen of late. It's around 4,500 rupees per share, well over that. And well, of course, State Bank of India has had its own set of challenges. But Neeraj, coming back to you, would you say the same for Bajaj Finance as well? If you're invested, stay in, but you wouldn't necessarily buy at these levels?
Actually, Bajaj Finance has been under our coverage for the last 4-5 years, and it's given significant returns. And whenever we thought that you should book some profits, it's always been a disappointment, and it's actually given exponential return. So there was not a good idea to book profits in Bajaj Finance whenever it's touched those highs. But even at these levels, it is getting the growth premium. So till the growth will continue, till they continue showing that 30-35% kind of a growth, I think the stock will continue getting that premium valuation. So definitely, when you compare this with something like a State Bank, there is that divergence where I think eventually a stock like State Bank should also do the catch-up, because the kind of branches they have, and then the focus has to come back into credit growth, even for PSU banks, at least the well-capitalized PSU banks. So that divergence should narrow down. But someone who's holding Bajaj Finance should hold on to it, because that outperformance will continue because the growth, and the growth premium will continue in the stock.
Okay, the stock today could be flat, but remember, it's been trading at its all-time high levels. Did not disappoint like the other NBFCs, and speaks volume. It could be expensive, trading at 7 times price to book, but it's just going from strength to strength. I also want to pull up, since we are on the topic of NBFCs, pull up Shriram Transport. Yesterday also the stock gained quite substantially. The numbers had come in day before yesterday, and that up move actually continues in today's trade as well. Neeraj, I'm not too sure if you got a chance or if you track Shriram Transport, but if you do, what did you make of the numbers?
met the company recently. So basically, they were of the view that at least the growth, the problem which was they were facing as far as growth is concerned has bottomed. So from these levels, at least pickup should happen. If pickup doesn't happen now, it will happen in the next 5 to 6 months. And the numbers were pretty decent. The only overhang in this would be the merger which may happen among the three companies of the Shriram group. So that can be just one overhang, but barring that, it's at a very good valuation. Numbers are pretty encouraging, and from these levels, you'll see pickup only happening as far as the advances are concerned. So, on fundamental, just on operating parameters, Shriram Transport is a good price to enter into, even after the increase that we've seen today in the price.
Let me just get a technical view here since the stock's been rallying in last two sessions. Manav, what's your reading on the charts for Shriram Transport? If somebody is holding long position, is it time to book profits or the stock is poised for further upside?
See, on a broader perspective, the prices are still in a sideways trading range, having support around the levels of 1050 and resistance at 1200. So it is still stuck in that range since past 2.5 months. The kind of a reversal that the stock has witnessed from its important supports and the momentum rally that we have seen, I sense on the immediate basis we could see rallies towards the levels of 1200 for short term. Yes, one can continue to hold their long positions. But the real big move or a trending move in the stock would actually unfold once if the stock exceeds 1200 levels, and post that we could see a series of up moves. So I sense at least for a medium term perspective, one can continue to hold long position with an anticipation for a break above 1200. The stop loss can be placed at 1080 on the lower side.
Okay, we also want to address Titan because what we saw yesterday was a lot of strength. Today there is a little bit of buying, but not as much. It's up around 0.5%. But the more important thing is that yesterday it, filled a gap which was made back in November of 2019. So that, of course, is the more important move, perhaps. Ruchit, now that that gap has been filled, where does Titan go from here on? How would you trade this one?
See, so that November gap area which was seen, what has happened post that gap down opening was is much more important to analyze. After that gap down opening, we have seen a long consolidation phase from 6th of November till yesterday, and the higher end of that consolidation was around 1235, 1240. Now yesterday we have seen a breakout above that 1240. The volumes were quite good compared to what we are usually seeing on a daily basis recently. So I think this is a positive sign, and this should lead the stock further higher, maybe towards 1340, 1350 near term. So we are quite positive after yesterday's move that the hangover, what we may say that post this gap down opening, this is over now. And I think even at current levels, or if we get minor dips around 1260, those I would ideally be good levels to enter fresh longs for target of 1350.
Okay, that's a Titan for you. And pull up the Nifty Metals Index. That's, I think, one of your top sectoral gainers also for the day. Nifty Metals is now up. Okay, it's at the highest point of the day, up almost 2.2%. Looking at the constituents of this index, of course, the steel companies have gone up, but the top gainer there is right now NMDC. So even the non-ferrous companies are doing good. So 5% gains coming in for NMDC right now. You've got Tata Steel, JSW, Steel Authority, Hindalco, you name it, and all these stocks are giving you good returns right now, between 2 to 5% respectively. Neeraj, before we thank you, a view on the metal space and for that matter, even the steel companies, where we've been hearing how the prices of steel have been moving higher for the last 3 months, and this is being confirmed by a couple of managements too. What would your approach be to this space, considering this also has weighing on global factors, if there are any negative global factors, be it from China or from any other market?
Yeah, actually, for the last couple of months, prices have been going up. So that's why we saw a decent up move, which started in most of the steel, ferrous and non-ferrous companies. But because of China coronavirus scare, there was some dip in these stocks, and now with some sort of global rally happening, so these stocks are coming back. But barring the price increases, I would even play some of these companies. Looking at the dividend yields and looking at the dividend payout, like you mentioned, NMDC, there are companies like Hindustan Zinc, Vedanta, Niveli Lignite, where the mining and metal companies, which because of the dividend distribution tax going out now in the budget, so they can be increasing the dividend payout, and these companies anyways which were giving good dividend payout. So you can look at that company, those companies which have a decent dividend payout. Plus, once the global headwinds or the immediate concern about the coronavirus is out of the way, then the increase, the prices that we saw earlier should continue and they should give you decent return. So I would rather stay invested in these companies and maybe pick up companies which can give a good dividend yield and the dividend payouts can increase. Like I mentioned, 2-3 of those names.
Okay, Neeraj, we'll leave it at that. Thanks so much for joining us and taking us through your views here. But let's get in a sense of what other fundamental analysts are looking at. And we have Prateek Agarwal of Ask Investment Managers, who expects the union budget to attract a lot of foreign capital. In an interaction with us earlier in the day, Agarwal explains his bottom-up approach investing listening.
It is a tendency of human beings to be never satisfied. So that said, yes, markets expected a few things in terms of surcharges being taken away, in terms of capital gain taxes being reduced. All of that did not happen. So to that extent, it was a disappointment. But the budget had several good things within it as well. I think it did a lot towards deepening the bond market, having foreign participation increase in the bond market. It took a lot of steps to develop the secondary market for infrastructure assets, which should be, positive FDI. So, if I try and put things in a line, in India, if you look at flows, budget can take a bit from one section of the society and give a bit to the other section of the society. India as a nation, doesn't see things change too much. If the budget is able to pull in foreign capital, it is good for the country, for asset prices, etc. I do believe budget has a lot in it to attract foreign capital, especially on the debt side, because we may get included in the bond indices, and on the FDI side. But that should have positive implication on equities as well, because if foreign flows on debt side happen, bond yields may go down and financial market players should benefit. So overall a tad positive, I would say.
Okay, overall a tad positive. And you said it could be a slightly positive for equities. There was a knee-jerk reaction, Mr. Agarwal, which was seen on Saturday when the budget was being presented. But I guess the market seems to have digested that fine print. We're back to pre-budget levels, at least for the Indian equities. What's the road ahead? Last 2 years, markets have been moving higher. I'm talking about the frontline indices, but it's been a polarized move. Underperformance was seen from the broader markets. Do you think 2020 can be a year where equities do well, but it could be a broad-based move too?
Yeah, so the move up in the market that you are seeing today, yes, it is, market digesting the budget, but it is also, to some extent with what kind of positionings happened on that day. And the merger of FDI, FI limit and NRI limits which have happened, which may have opened up some buying space in some of the better quality names. That said, coming down to your question, we do believe 2020 should be a better year. In terms of dispersion of performance, 2018 was a very narrow year. 2019, the breadth actually improved a bit versus 2018. And I do believe 2020 should be significantly better. The manner of thinking is that the heavyweights, which were very cheap at the beginning of the year, have seen significant price appreciation over actually 2 years now. And now if markets perform, the participation has to improve from what it is.
Okay, Prateek, good morning. Neeraj here. This uptick at the broader end of the spectrum, would it largely be bottom up, or would you believe that there are themes which might actually do well? I mean, this quarter we've seen, without exception, almost all specialty chemicals do well. We haven't quite seen the same mojo in real estate because it's been chalk and cheese, which were arguably two of the best performing themes of 2019 as well. So the broader question, more bottom up or more thematic?
So we are bottom up, and we believe one should be focused bottom up rather than do themes. It is no longer a market where every name in a space will do well. It is a sharply differentiating kind of market. The best in this space does significantly better than the second in this space, and the others simply don't participate. It is that kind of a market. So we have continued to be bottom up. In terms of broad spaces where we are getting what we want, which is sustained performance, financials and consumers continue to be a good place to focus on. Chemicals, yes, specialty chemicals benefiting from China to India story, not on the commodity side, more specialty is something that we like as well, and some small bits in the capex side of the story as well. So it is probably time to look there as well. The rally will be helped by agri, and we should not lose sight there. The last season, while the crop in terms of tonnage may be similar to last year, in terms of value it will be higher. And for the next crop, both tonnages and value would be higher. So by some estimates, it could be like 15% increase in overall incomes for farmers this year over last year, which is significant. So that is something one should keep sight on as well.
All right, that was Prateek Agarwal of Ask Investment Managers on his views on Indian equities going ahead this year. But let's also talk about the Fab 4 stocks of the day and go across to Sharad Dubey to find out what features in his list. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Kaplan Point Lab. The stock has hit the upper circuit of 20% today and is top gainer in the Nifty 500 index. It came out with a stellar quarter of quarterly earnings, with the revenues rising by almost 44% to almost 228 crore rupees. Even the profits rose by almost 28%. However, there was a margin contraction of almost 600 basis points to 29.7%, and the robust growth was seen, coming in from the branded generic business in India, and also a strong institutional order coming in from South American business. The management did talk about the coronavirus situation in China itself, where it has had no impact as the company's main suppliers come from Shijiazhuang industry district, which has continued the production without any stoppages. Up next is India Energy Exchange, which is up almost 6.7% after Nippon India Mutual Fund acquired almost 2.5% stake, or roughly almost 77 lakh shares at rupees 166.5 rupees per share. LSVP Mauritius were the sellers. The next stock is SRF, which is up almost 6.5% after its management had a strong guidance, coming in its con call, where it reiterated almost a 40 to 50% year-on-year growth for specialty chemicals business in FY20, and also they indicated a possibility of guidance beat in FY20 due to a healthy flow of customers coming in from the abroad. Even the brokerages raised the target price from 3,950 to almost 4,404 rupees. And the last stock of the day is REC, which is up almost 6.5% after fresh longs were seen with a high open interest of almost 25%, and the volume trading at almost 6 times its 20-day average. The company also came out with its quarterly numbers, where the NI rose by almost 17% and the net profit rose by 25%. Back to you.
All right, Sharad, thanks so much for joining us and getting us that update on, 4 stocks which are buzzing and advancing in trade today for varied reasons. But on that note, let's get in Yogesh Mehta of Yield Maximisers, who's joining us on the show. Hi, Yogesh, welcome in. We were talking about SRF right now. What's the view here? Because SRF just continues to run higher and higher. If not SRF, then which is the other chemicals company that you like at this point in time? What's the view on the sector in general and your picks perhaps in this sector?
Hi Adam, good afternoon. Especially if you mention about the specialty chemical, where SRF is the biggest contributor and largest player, wherein the result which have come yesterday, where specialty chemical business is doing wonderfully well than the other textile business. and other chemical business. So I think the capacity addition for far-sighting their business for next 2 years in the demand, and equally we have seen that China demand, due to China, the demand will, the order and demand will flow towards other countries where India is a major player. So I believe that in specialty chemical, there are quite a few players here who are into now mid to they're mid to not the mega cap, but mid to moderate mid companies, where I believe that Aarti Industries is the one. Even SRF can be seen further, but at this level, at 4,000, near to 4,000, the upside seems to be 10 to 12% hardly for the entire year. So the Q4 number will be equally good for all these companies. So Aarti Industries is one where 15-17% CAGR growth we have seen over last so many years. And even the capex they have done in their Baroda and other Gujarat plant, they are contributing from Q4 itself. So I believe I project that yes, the profit for Aarti Industries will grow by, instead of 15-17%, will be 21-22% for this quarter, and that will contribute for the perpetual quarters henceforth. So there I believe strongly that around 980 or 1000 odd level currently, it can be a good opportunity for investors to get into if they really want to play in the specialty chemical. Outlook remains very robust.
Okay, and this space has actually given good returns to its shareholders as well. And look at how SRF has bounced back after a muted session yesterday. But I also want to pull up Berger Paints. The number just came in a while back. The revenue growth is about 5%. Profits for the quarter, they've come in at about 182 crore versus 133 that was seen in the corresponding quarter. The numbers are, by the way, flashing on the screen as well. The profits are up 37%, and at operating level, there is margin expansion. So 17.5 for the margins being posted for the December quarter versus 15.5. Net, not a major reaction coming in terms of stock price, but I guess as per Bloomberg estimate, the net income, that's the bottom line, is just a tad below as opposed to what the estimates were throwing about. Yogesh, these are expensive stocks, be it Berger Paints or for that matter Asian Paints. They both are trading at their life highs, and of course some tailwind now with crude prices correcting. Do you see more value at current levels? The industrial side of the business has been impacted due to slowdown in autos, but it is the decorative space where volume growth has been quite strong.
Yeah, Navneet, I believe that yes, decorative paint is doing very well, and the demand is improving. Auto is also one of those where we have seen slowdown, but for the after sales market is also equally strong for the autos, but there will not be a much of significant contribution. As far as raw material is concerned, yes, crude is very much in favor for these companies. That's why we have seen margin expansion a bit of more, which is now driving growth. But consistency seems to be very much valid for all these companies. And being a second player, and there is a wide gap between the player one and number two player, which is Berger Paint post Asian Paint. I think yes, around near to 600 level, the stock is yes expensive. The growth is not consistent. It is not linear even. So I believe that rather than getting into Berger Paints, which could be a good player, but rather than that, Asian Paint would be a much better play for as a capital preserver plus consistent growth driven.
Okay, want to pull up Piramal Enterprises as well. It's done well over the past couple of days, but after seeing a very sharp decline before that, for now it's back above the mark of 1450. But the real question is, would you buy Piramal Enterprises at these levels, at least on a technical level? So let me get Ruchit in for his view on Piramal Enterprises. Ruchit, how would you trade this one?
Frankly, it's very difficult to trade in this stock because of the volatility that the stock has shown in last few weeks. The stock was trading around 1400 at the start of Jain. From 1400 it rallied to 1700 and back towards 1350. So I think the risk is quite high in taking up fresh trade over here. I would suggest that in case if any existing long positions are there, then because 1300 is the support which was even seen in the month of October, then one should hold the existing longs with the stop loss, strict stop loss placed below 1300. But frankly, won't advise to create fresh longs over here.
Okay, I'm not advising to create fresh longs, and as Ruchit clearly highlighted, this has been a volatile counter. You did see a rebound yesterday, but I guess on Monday the stock had seen a correction of about 6 to 7%. Before I get a fundamental view on pyramid from Yogesh, Manav, coming on Tata Steel, considering the moves that we're seeing on these metal companies, a lot of these technical analysts have been betting on Tata Steel of late. Would you also bet on it? It's at 472 right now.
Surely, in fact, the prices have breached its falling trend line drawn from its recent peak, and we have seen a very strong rally recently. In fact, today the prices are also closing above its key important retracement level, which confirms for a short-term bottom in place. And looking at the update coming from the Chinese markets, I sense it will be quite positive for the metal space, at least for next couple of trading sessions. And one can also take Tata Steel as a BTST trade for tomorrow, having a stop loss at 460 on the lower side for an upside target of 490.
Okay. PTSD call, and remember, a lot of the technical analysts that we've been speaking to, they've been bullish in case if there is more recovery which is to come by for these stocks. They've been betting on Tata Steel, and that remains a topic within the steel companies. Yogesh, we were talking about Piramal Enterprises and the sort of volatility the stock has seen. Of course, the recovery yesterday also came by once the management indicated they will be looking at some bit of value unlocking from their pharma business. What are your thoughts on it? Do you think it can be a good investment, or one should stay away from it?
Noted, it was my preferred pick till last maybe 14-16 months back, where I was betting very high. But post that, when we saw that the retail space is doing better than the wholesale, and PL was majorly into wholesale until now, till date, they are now venturing into retail now, off late with the last quarter numbers. What they have done is they've raised very sufficient capital in the first 9 months, where around 14,500 crores, and by divesting their stake into the pharma company, the analytic business, even Shriram Transport Finance, they've sold the stake. Even the right issue has generated 3,500 odd crore rupees. So all in all, I think they are very much well capitalized for the future growth. The only thing is the Lodha exposure is still significantly high, about 2,500 crores. Company PAT is growing by 27 to 28%, 28% over last so many years, and above that it was 25% growth rate, and now it is 28% growth rate for last 2-3 years. It will remain consistent. The only thing is the migration from wholesale book to the retail book would be a bit difficult for them. But 1300 was the right price, the right issue they have issued for the existing investors. I think that will give some psychological support. And if they are venturing into this retail, focusing more into retail, and if they get succeed, then one can give a chance, take the chance here to buy. And downside seems to be one has to be very, very cautious about the downside. If there is any alterations into the management plans for in next 2-3 quarters, then it will be a negative for the company. But otherwise, I think around 1400 level, yes, it could be a good investment pick.
That's Piramal Enterprises for you, but the top loser on Nifty has been Z Entertainment. Remember, the stock was weak yesterday as well after some media reports had indicated that there is some probe which is ongoing, and they've issued a clarification to the exchanges. I'm going to read verbatim. They've said they are in receipt of the letter dated January 21st, 2020 from Ministry of Corporate Affairs seeking certain information and inspection under some section of the Companies Act. But they've also said the information which is sought by MCA is already available in the public domain. However, they're still collating all the desired info which the MCA has asked for, and they will be providing the same to MCA with an intent to fully cooperate with the ongoing investment. The stock's actually recovering from the lower levels, and they've also said the conclusion, there is no adverse inference as of now which is being drawn by for the company by any authority as of now. So it's sort of a mixed clarification which has come by, which they have said that no authority has accused the company, but they've only sought for some information, and that letter has been received by the company on January 21st. Very quickly, Yogesh, comment on the entire development. Yesterday, of course, there were news reports indicating, and now they've already come out with a clarification. Yes, they are in receipt of a letter, but they've also stated that there is no adverse inference so far which can be derived from it.
It will be too early to say, Navneet, but I think there is no smoke without fire. We have seen erstwhile quite a few examples in last 12 months. So one should remain very cautious about that. Already there are not many headwinds are tinkering over the heads for this company. And if this one is also coming, then it will be a one more leg pulling kind of stuff for them. I think one should remain avoid such kind of a stock into trading bed or into the positions for investments rather than getting into this. It could be a blow. It can give a blow to the investment portfolio if there is any wrongdoing has been witnessed, and we have seen such kind of things in DHFL, Yes Bank, Indiabulls Housing Finance, and so on and so forth. So better to avoid in such kind of controversy at least.
Okay, before we get in, move on with some updates within the coal sector, let's very quickly take a technical check on Z Entertainment as well, which is currently under pressure. Manav, your view on Z Entertainment based on what you're witnessing right now, how would you trade it, or you'd want to avoid it right now?
See, the overall structure for this stock has been very weak. In fact, the prices did also observe a very strong breakdown from its important weekly support levels, and this breakdown has accompanied by good amount of open interest, which confirms that there has been an aggressive short built up. Also, even at the current zone, there will be series of selling pressure witnessed into the stock, and the resistance would be at 230 to 235 range. So my sense is that one can continue to maintain a sell on rise approach, and on the lower side the prices are likely to retest its recent lows. So we maintain our lower targets of close to 210 and 205.
Okay, all right, let's move on. We have Coal India, which reported about a 7% jump in its coal offtake last month and the highest in this financial year. But that may not be enough to make up for the sharp drop in the dispatch in FY20. Nikki Mirchandani joins us with more on it. Nikki, good afternoon. What do you have for us?
Hi, looks like, if you look at the Coal India offtake numbers, that's going to be the first dip probably that we're going to see since FY 2007. We're estimating a downtick in terms of offtake to an extent of 3 to 5 odd %, and the numbers that we're working with will be around 592 million ton, which is way lower than what we saw in FY19 for that matter, where Coal India clocked in a growth of around 4.8%. So clearly we're seeing some amount of dip coming in for this financial year, given the estimates that we've picked up from the brokerages. This comes despite the kind of growth that that company registered for January. If you look at the numbers that we have seen for January, that's a healthy 7% overall growth in terms of the offtake numbers, which is essentially driven by the recovery that we've seen in two big subsidiaries, that is SECL and MCL, which have registered 9% and 16% growth respectively in the month of Jan. But then overall, YTD basis, Coal India has reported 4.8% dip out there. Host of factors actually have weighed on the performance of the company so far. Primarily, it's got much to do with the problem of production. There is a shortage in rake availability. We're seeing delay in finalizing subcontracts, longer than anticipated monsoons for that matter, and strike essentially at two big mines, which in turn has weighed down on the financial performance of the company. Having said that, the track record continues to be pretty much dismal for Coal India overall. If these numbers do come through, then we'd be looking at a 12th consecutive target miss for Coal India, that the company could register, and this is going to be the 12th consecutive year that Coal India wouldn't be able to perform as much as what the target was set right at the start of the year. Not surprising though, the company seems to be used to it given the kind of trend that we've seen so far. But then how does the road look like in FY21? Well, we're looking at a slightly better picture because looks like the worst is behind us, and the company's two major fields or mine fields, they have subsidiaries have recovered from the floods and the situations that we've seen in terms of strike. They have recovered, and we're expecting a 6% uptick coming in FY21 numbers. So the road looks slightly better, but then this year definitely looks challenging for Coal India.
Thanks, Nikki, for that update on Coal India. And remember, the stock's been trading way, way below its historical averages in terms of valuation, or for that matter, even its issue price when the IPO came about in 2011. I think it was somewhere about 245. Every time the stock recovers a bit, there is selling pressure which comes at top. I think we'll keep an eye on Cipla as well. The numbers are just about to come by. My producer tells me I think they've already come. We'll get you those numbers. They'll be flashed on a screen in a while. However, in terms of performance from Cipla, we were expecting the revenues to come in at 4365 crore, which would have been okay. The stock's corrected quite sharply. Net profit is at 350 versus Bloomberg estimate of 431 crore. That's a big miss, hence that reaction that you're seeing. And EBITDA is at 758 versus estimate of 858. So it's a miss even at operational level. Revenues are at 4370 crore versus estimate of about 4365. I think the revenues are just around in line, just about in line, 9% growth on year-on-year basis. But I think it's at operating level and even the bottom line. I think weak operating performance would have trickled down to lower profits also for the quarter, and the stock has declined post the numbers have come by. Yogesh, you want to come in on Cipla?
Navneet, I have not seen the number, but I think this time around they already were lacking about the A&D approvals from the US market. So that was the YY degrowth was expected from my side. And I think the control cost was the only factor where we were expecting that if there is any margin improvement will come, that will be from that level. So we need to see that also, how the margins have fared in this quarter. And opportunities for US markets over the next 12 to 15 months, that Concall will have to have some clarification there. So overall, I think it's not my preferred stock because it's already running it's quoting at very expensive level, and the growth rate is not in line with what it has to be to command such kind of a 20-22 times P multiple. Wherein Aurobindo and the Lupin are equally good numbers, good companies, and having a good exposure over US markets, and now their US FD is equally bad for all. But yet I believe that 7.5 or 9.5 times P multiple range in Aurobindo and Lupin I have never seen. So that could be a biggest turnaround cases for pharmaceutical businesses as far as companies are concerned. So my preference will remain there rather than Cipla.
It's not exactly a sharp reaction, because even that knee-jerk reaction where the numbers, when the numbers did come in, we saw a drop around 1.5%, and eventually we've seen a recovery. So for now, it does seem like investors are not really as perturbed about the weak operational performance that we have seen. And of course, revenues come in line. It's going to be about the fine print, I suppose, and what that tells us with respect to Cipla and its operational, I would say lack of performance out there. But yeah, that's it.
Stock's already recovered. I think there's a 13% growth which has been reported for US business, and we were expecting that business to grow about 10%. And of course, we'll wait back for this geographical performance. It's key to monitor there. And with regard to domestic business, we were expecting a growth of about between 8 to 10%. Let's see how that pans out. But Ruchit, any technical view on Cipla at 449?
So I think if you look at recent past, then since the month of October, 435 has been acting as a good support. Be it mid-November, the stock showed a pullback move from 435. Again, in the next correction in second week of December, 435 acted as a support. So I think even today, post the announcement of the numbers, the prices have not breached that support. I think one should take this as a positive sign. I would say one can take a contra call by creating fresh longs over here around 445, 450 range, keeping a stop below 435.
All right, Ruchit, can you also come in on Tata Motors, because that's actually the top gainer on the Nifty right now, not only the auto index, and what a sharp up move that we've seen here. It's up 11% now at, or rather near days highs at 183, 184. What's going on, Ruchit? What are your observations here?
So last 2 days the stock had formed back-to-back dojis at its 200-day moving average, and the resumption of the up move in today's session is much a positive sign. If I look at some of the options data, 180, 170, 165, all the call options, even 190 call option have witnessed a good amount of unwinding, which is clear signs of short covering as well as fresh long formations in the stock. So I think now the stock should test again the range of 195 to 200. Any existing positions can still be held on.
Okay, that's the technical view. But Yogesh, before we thank you, your view on Tata Motors. Of course, it's seen a big move, but let's not forget the stock's not done too much in last 1 year. Valuations could be attractive, but we've not seen any good move coming in on the stock. Do you think from a longer term horizon, next 2 or 3 years, it can be a good value bet?
Yeah, Navneet, my last conversation also, I will repeat my same words. For 2020, I think Tata Motors is the best pick for in auto segment. And as I derive that the valuations, of course, are low, but the China had been, that was the only cloud of worries which is now going to disperse. And secondly is Brexit is already clear. So putting these two in perspective, the cost efficient and the cost cutting measures which a company has taken over, that will drive their margins and the profitability for the company. Even Indian operations, which is a mild one on the balance sheet, is which was providing pressure on the losses side. Now that has been already gone. I believe both the international and the domestic operation will be in limelight, which will be a cash flow generation, and that will drive the P multiple moderation. Instead of moderation, it will be on a higher side. So I think gradual pickup will remain there. My target for Tata Motors, even at the day before yesterday when it corrected, I do advise to buy. And even 200 level, I was a buyer. And I believe 275 to 280 could be the target over next 4 to 6 quarters.
All right, Yogesh, we leave it on that note. Appreciate you joining us and taking us through your thoughts on the markets. And just few minutes to go for markets to shut shop. Third straight day of gains coming by. And remember, it's been a strong rebound after the carnage seen on budget day on Saturday. So we're closing very close to that mark of 12,100. 114 points higher for Nifty. You've got the Nifty Bank also, which is closing above the mark of 31 points, and Sensex gaining about 365. In fact, that too crossed the psychological mark of 41,000 in today's session. And the move was seen across the board. So you even had the broader market indices. Nifty Small Cap 100 Index has gained about 0.7%, and BSE 500 Index is up nearly 1% in trade. But talking about Nifty constituents, what the gainers and losers in today's trade, let me begin with the gainers. Of course, Tata Motors was your top gainer, 10% higher. Yes, Bank was also up and about, so some recovery coming by. And the steel companies, the entire metals pack was quite active. So Tata Steel, JSW, Hindalco, Vedanta, all of them were up and about. While you also had on the losing side stocks like Z, clarification coming by. The stocks closing off the day's low, but it was still under pressure. Hero MotoCorp was down about 4%, and you had weakness coming in for stocks like Dr. Reddy's, Power Grid, and for that matter, even Maruti, which managed to rebound. But I guess today there was some profit booking which kicked in even at higher levels. And of course, stocks like Coal India, Adani Ports, Asian Paints witnessing profit booking in today's trade. But Agam, what about the broader markets?
Needless to say, Navneet, it's been a very good day of trade for the broader markets, and we have a lot more gainers as compared to losers. So let's start by talking about Kaplan Point on the NSE 500, which has blocked an upper circuit of 20%. It's had a stellar day of trade, as you can see on your screen there. We've also seen good gains in Jacob, not a name that usually comes up, and among the top gainers too, but a large chunk of the gains came in especially in the second half of the session. Shriram Transport Finance reacting to earnings. We're seeing good gains coming in, closing near day's highs. So that, of course, is a positive. Prestige Estates is the other one which is doing well in today's day of trade, up around nearly 7%. Kaveri Seed Company is in focus. That is also up around 7%. The bulk of those gains coming in the last 1 hour of trade, in fact, the last half an hour. So there's been a surge, I reckon, on volumes too. SRF is the other one, and there's no letting up for this one, is there? Well, despite the fact that it may lose out on its guided range for one of its segments, it's actually up and about by up and 6.5%. Avanti Feeds, on the other hand, not the best day of trades, and off late, it's not really been one of those stocks that would come up with in terms of the biggest losers list, but today here it is below the mark of 600 rupees per share, and I wonder if the people, traders, will take this as an opportunity to move into the stock. Cochin Shipyard is the other one, which is down 8%, and Jyoti Laboratories also reacting to a disappointing set of numbers coming in. Well, that's down 5.5%, likely to close at towards the day's low. But that said, well, at least as far as the broader markets are concerned, let's start off with the benchmark indices for now. Well, looking at gains, Navneet, and we have clearly, well, more than taken over from what we saw on the budget day.
Absolutely, Agam. In fact, tomorrow we'll be watching out for that 50 DMA, which is somewhere about 12,120. But it's a strong close, I would call it. Markets have clearly digested the fine print of the budget, and remains to be seen now whether in the near term we can cross those all-time high levels on Nifty of about 12,430. But having said that, let's just look at the Nifty contributors then, which were those stocks which contributed to those 120-point gains. So clearly dominated by our heavyweight HDFC Twins, which have 20% weightage, contributed about closer to 40 points. Reliance Industries has bounced back, and that too has been contributing to the rebound that we've seen on Nifty, and ICICI Bank also closing the day in the green. While on the stocks which have capped the moves, not too much actually, they've not dragged the index by a higher point. So Maruti just dragging it by 5 points. Infi, Dr. Reddy's were a couple of other losers for the day, Agam.
I'd certainly be curious about the advance decline ratio and see whether or not that ratio is as good or better than what we saw yesterday, because do remember that yesterday was a day when we did see about nearly 3 to 4 gainers as against 1, and maybe if that can come up for you on your screen. Well, no, not really. It's not that big of a gap, so certainly as not as what we saw yesterday, but well, I suppose we'll take solace in the fact that there are more advances as compared to declines there.
Yep, and let's also take a look at the participation then, how the turnover panned out for the day. The NSE F&O turnover picking up. Today was the penultimate day to the weekly expiry, so it was bound to pick up. On the cash side, in the last 3 sessions, of course, we've been seeing a turnover northwards of 40,000 crores. So that tells you the rebound has also come in on back of good amount of participation. And the BSE cash turnover also appeared to be on the higher side, closer to 35 crore. Having said that, let's get you some closing thoughts coming in from Ruchit. The sort of recovery that the markets have seen now in the last 3 days, would you take any fresh bet tomorrow on Nifty or on Nifty Bank?
I think as the biasness would continue to remain positive, because this V-shaped recovery from the 200-day moving average certainly has been supported by a good broad market participation, and this is the sign of the resumption of the higher degree uptrend. I think as far as levels are there, 12,050 to 12,020 would be the support range tomorrow. So in case if we get any minor dips in the spot levels around 12,050 to 12,020 range, use that dip as a buying opportunity. Keep a stop loss below 11,970, and we expect targets around 12,250.
All right, we'll see whether that uptrend continues tomorrow or not. But Ruchit, thank you so much for joining us and taking us through your technical views on the markets.
Well, on that note, it's a wrap on this edition of Countdown. Well, but don't go anywhere. There's lots more lined up. Stay tuned to BloombergQuint, and we keep bringing you more.